This is Mitch, and welcome to the Real Estate Investor Summit podcast. Man, I am overjoyed here today because I'm going to go hunting after this episode. I'm going to the range. I'm here with Gino Barbaro, and we're going to be talking about apartments and how to make money in the apartment business and how to, I don't know, what's the three-legged stool, Gino?
Buy right, finance right, and manage right. That's what you need to become successful. And I think almost any endeavor of real estate, but multifamily especially.
Yeah, so we're going to get deep into this. Right now, I need to pay some homage to my sponsor, taxfreefuture.com. If you don't have a tax deferred or tax free entity that you're growing your investment or your retirement in, you have a huge tool in your tool belt that's missing. Please go to taxfreefuture.com, watch the videos there. You won't believe what your financial advisors are not telling you. We're going to tell you what they're not telling you, and then we're going to tell you why they're not telling you, and then we're going to show you what to do about it if you want to. Just go there and take a gander. It's life altering. I've been using it for years. All right, I'm back with Gino Barbaro, and tell us a little bit about your history, sir.
Mitch, I was in the restaurant business for 20 years in New York.
That's the toughest business in the world, isn't it? And then in New York to boot. That's
It was the
like
worst.
the hardest business in the world. You don't have any gray hair, although I do notice you have a 7 head like I do. We used to have 4 heads, and now we both.
It's getting there. Yeah, it's getting there. So, it's funny. I bought it in 94 with my dad and my mom back 20 something years ago. It was freaking awesome. We made money. I mean, it was a great business back then. The Great Recession comes, and then all of a sudden everything changes. You're working harder, you're making less. You have regulations, you have Uber Eats, you have healthcare, you have costs going on, you have $15 minimum wage coming on. It's just overwhelming. I'm saying to myself, I need to do something different. I find my partner, Jake. He's in New York. He moves down to Tennessee. Long story short, we started buying apartments back in 2013. But, the whole genesis of that was I knew what I wanted. I didn't want to be in the restaurant business, and I wanted to create some type of passive income. I wanted to start small and make a few bucks a month to pay for my family. I've got 6 kids, so I've got to, put them through college. I've got to put them, they got to get married and all that. So there's bills coming due. So I said to myself, I can't keep doing what I'm doing. I don't like what I'm doing. I don't want to look back when I'm 74 years old and say, man, I just didn't take a chance. I just hated my life, and didn't hate my life. I hated what I was doing. I just didn't feel like I was having any impact. And I wanted to change that.
Yeah, so 2 things there. One is, it's been my experience and experience of most of the people around me that while working with family sounds really great, it's very difficult sometimes. Did you have the same experience?
I was the older brother, and I was always leaned upon. I was the guy in the kitchen. I was doing the dirty work while my brother up front was having a little bit of fun. And, you get a little resentful. The dishwasher don't show up. I'm washing dishes. I'm on the cooking line. It's 90 degrees. And it gets a little frustrating at times, but that wasn't one of the reasons why I got pushed out. I blame him, but I ultimately have to blame myself because I wasn't stepping out. I wrote a cookbook. I was trying to do a branding with the restaurant. I was getting on Facebook. I was doing physical products. I was really creating a brand. I had the kids in the garden, shooting gardening videos, trying to teach families how to get around the dinner table. So I was starting that before I started Jake and Gino. So I love that portion of it. But my brother wasn't on board with me, and he wasn't there yet. So I said, you know what? I've got to go somewhere else. Because if we had done that, created a nice pizza sauce with Dad's name on and all that, we were really creating a nice brand. But it just didn't take off because he wasn't there with me. So.
Well, it takes a team, and
That's
part of the problem is people got different ideas, and it's hard to get your. I'm just saying this for the people that are contemplating getting in business with family. The problem with family is you can't fire them and replace them.
That's right.
It'll ruin the relationship,
Mm-hmm.
So I have a lot of people. Oh, well, my daughter can work for us. My husband can work for us. I said, no, I have to have. I don't tell them this, but in my mind, I'm going. I have to have someone I can cut loose at the drop of a hat if I don't like what's going on, and not affect the rest of my relationships with all my other people.
It's funny you say that, Mitch, because I had cousins who wanted to work for me. I had my brother's brother-in-law wanted to come. I said, listen, the wives aren't working there. Our kids are all great. Our kids can work there, but no extended family members. And I was just born into it. So I was just raised that way. And I had a strong Italian dad. So my dad's like, his deathbed, he's like, you've got to take care of your brother. So what does that do to you? It kills you. So I was always the one who was the responsible one. And like you said, you have to be really wary. Cut them out of the operating agreement. Make sure it's you, your brother, or whatever, and anybody you hire. biggest mistake that I made in business was not firing quick enough, not hiring right. But even worse, when somebody is there and it was cancerous, not firing quick enough, thinking that limiting belief of, you know what, I can't replace that person. It's going to be really hard for the first 2 or 3 weeks. Short-term pain, long-term gain. Trust me, biggest mistake I think I made. That's why I'm not in the restaurant business anymore, because I'm stuck in the kitchen. I'm saying to myself, these guys are killing me. I mean, it's me, but it's really them. But I didn't think I could replace them. And that was the biggest mistake. So from one restaurant, we own over 1,500 apartment units in 5 or 6 years. What happened? We learned how to hire, we learned how to implement some systems, and we learned how to really scale a business and really thought of multifamily as a business. Your business is a business. Everyone thinks real estate is real estate, but it really is a business. You have to implement systems. It's customer service. There's a lot of things going on that I didn't do in my single restaurant that I'm doing now in the real estate space.
Yeah, so I don't want to take away a whole bunch of time with this, but it's a really important topic. And what I like about this podcast is a lot of times it's spontaneity. I didn't plan to talk to you about this, but I think it still needs a little bit more conversation. I say that family's really tough. I have family all in my business. And that's how I know. It's just though, my daughter's worked for me for 24 years. She's closed every deal in and every deal out for 24 years. And there's a certain amount of, and I think the reason why people go with family a lot of times is because the auspice is, and it's usually correct, the wife or the daughter is going to care a lot more about your business and your money and your name and your reputation than anyone else on the planet. That's a given. But having that being said, and my wife keeps track of all the books and the bookkeeping and everything in finances because she's really good at that. But it has caused some major problems. I have fired my daughter for up to 1.5 years, and it took her 5 years when she came back to get back to what she was making before she got fired. I mean, and we laugh about this, and she's today we laugh about it. But she wouldn't make it to work on time, and she never made it to work on time. And I told her, you do it one more time, and you're out of here. I guess she didn't believe me. Anyways, the bottom line was, family started clicking in my business when they figured out that I had an axe and I wasn't afraid to use it. And if you didn't want to follow me, then you're probably going to be looking for a job somewhere. So if you want to hang around, I'm the leader of the ship. That sounds pompous and maybe narcissistic or whatever, but it's hard to run an army with too many generals. I mean, you know what I mean?
Yes. And you just have to tell your daughter or my son or my daughter works for us. She edits podcasts. She does videos for me. My wife is a life coach. So she sort of works with some of the clients we have. My son is 17 years old. He's sending out mailers. He's sending out cards. He's calling up investors for certain reasons. And I tell them, if I tell you to do something, it needs to get done. And if it doesn't get done, Josh is going to see that. Jennifer's going to see that. Everyone on the team is going to see that you guys are slacking. I'm cutting you slack. It doesn't work the other way around. So I've already set the expectations. I think you have to set clear expectations that if you can't be at work by 9 and you're there at 10 o'clock every morning, we can't work together. And it's no hard feelings. I love you. You're my kid, but this is not charity. Go out and make $10 an hour working at Publix. So you can do that, right?
This business doesn't care how much we love you. It doesn't give a crap how much we love you. It does not care. This business is ruthless. It's black and white. It's plus or minus, and that's all there is to it. And it doesn't matter. So let's get on with the apartment section here. So tell me what first raised your head to real estate in general. How did you go from the restaurant business? What all did you go through to find land on real estate? And then we'll talk about what made you pick apartments.
Well, my parents are both immigrants, so they both had a little extra money, and they're like, you know what do immigrants do? They save and they invest. So I bought a fourplex back in 2002 in New York. I said to myself, I don't want to fix and flip. I didn't really know about the money, lending private money. I said, you know what? I want to buy an asset. Let me get some cash flow. I can't do fix and flip because I already have a job, and I don't want that transactional money. I don't want to raise my tax base. So I said, you know what? Let's buy this fourplex. Loved it. I said, this is great. I can make a few bucks. It was right next to the restaurant. I was using it as a storage area. So I had a home run with that property. Moved over. I did a mobile home park deal. Had a little extra money. I always tell people, a person with money means a person with experience. The person with the experience gets the money, and the person with the money gets the experience. It happened to me. I didn't know what I was doing. Had no due diligence experience. Had no idea about the sponsor. He had been doing it for years. I had met him through a personal friend, but still. You think I should get on a plane and fly down and take a look at what I'm buying? I made all those mistakes, and that really motivated me into getting into real estate, into coaching, into life coaching, into really finding out what this real estate gig was. Because if I'm going to be doing it long term, I need to invest in my education. I'm really a huge believer of that. And I said, you know what? I like multifamily. You can't buy it on the internet. People need a place to live. and it is becoming a renter nation. It was even becoming a renter nation 10 years ago, right around the Great Recession. Once people started losing homes, it just flipped. And I said, let's go into apartments. So I said to my partner, Jake, you know what? We can both buy a 20 unit together while we're working. He was working as a pharmaceutical rep. I had the restaurant, and that's why we landed on multifamily.
So you were you were holding on to the restaurant and keeping everybody paycheck and even eking out a paycheck yourself, but you could see it was not gonna weather the storm, for you. So you started doing it part-time. And I want to make this point. So many people, very few people jump off into the real estate game like 100% and just dive in. It would be foolish anyways. It's too much pressure. You got a gun to your head. Almost everyone I know did it part-time, including myself, including Gino here. You keep some kind of base, and then you got to burn what people don't get is you got to burn the midnight oil. After you get off work, you got to go to this other thing and go to work. And believe me, if you're not on fire with the prospect of what you're doing after hours, it ain't going to work because it's too many hours in a row, right?
Mm-hmm. Well, I would get up in the morning. We homeschool our kids. So I'd get up in the morning, homeschool my kids for a little bit, for about 45 minutes, go to work at 10 o'clock, have lunch at 2 to 3. I'd do real estate, 3 to 9 restaurant, come home at 9 o'clock, do another hour and a half. I was doing podcasts at the time. I was underwriting deals. I was going crazy for a couple of years, and I weaned myself off. So February of 2013, we bought our first deal. July of 2013, we bought our second. February of 2014, we bought our third deal. So within that year, it took us 18 months to get that first deal. But within that first year, we had 200 units. So I'm looking at myself, I'm saying, I can do this. And my epiphany was, I'm in the restaurant, I'm in my storage shed, I'm putting away those containers, I'm doing $10 an hour work, and I'm on the phone negotiating an $11 million no money down deal. And I stopped, I say to myself, what the hell am I doing here? I mean, and I felt like an idiot, right? I have pizza bags next to me. I have sacks of flour next to me, and I'm talking about an $11 million no money down deal. We closed the deal in August of 2015. October, I say to myself, it's time to burn the ships. Now, if anybody out there knows that feeling, it's scary as hell because I have 6 kids. I live in New York. My taxes are 30 grand. I don't know if I can do it. Doing something for over 20 years and it's ingrained in your physiology. You do this every day, and all of a sudden you're going to say to yourself, I'm not doing this anymore. You lose your identity, right? And that's a hard thing. I lost my identity as the pizza guy, as Gino's Trattoria, and switching over to Jake and Gino, the new multifamily identity. That was scary. So October of 2015, I told my brother, quitting during the week, I'll work Friday, Saturday, Sunday for the restaurant, but during the week, it's restaurant. So for 6 months, I did that. March of 2016,
during the week, it's apartments.
Yeah, exactly. During the week, it was apartments. It was Jake and Gino. It was underwriting deals. It was going to Knoxville. It was doing whatever we had to do. But I loved it. I knew what my why was. I had clarity. So if you have clarity and you have a strong enough why, you'll figure out how to do it. So it wasn't all this, hey, I'm going to quit everything and do it. I was the responsible one. Now, if you're young and you're getting into it, get your real estate license, go full time. If you have no things, try to buy a duplex house, do whatever you can to become financially free or to lower your bills. Become a producer. Don't become a consumer when you're young. Really produce. You want to consume knowledge and consume education and consume someone who can mentor you, but don't do the other stuff. Become financially free, and then you can really set yourself up and buy whatever you want when you get a little bit older.
Yeah. So you decided that you told the family and everybody, I'm only going to be at the restaurant Friday, Saturday, and Sunday, right?
Yep.
Okay, man, you clipped along at a pretty good pace once you purchased the first building. What took so long? What took the 18 months?
Jake had moved down there, so we have Barbaro and Stenziano in Knoxville, Tennessee. I mean, call it what you want. Y'all ain't doing business down here. You got to meet the brokers. You have to go down there. It's unsteady. You look at deals. Deals don't make sense. You're a little afraid. Jake goes on. He has to buy a home in the meanwhile. I'm like, Jake, what are you doing? I know you got to satisfy the wife. She comes down. So it's slow. When you first start out, you don't know. These deals are coming at you, and they look like they're too good to be true. So you underwrite deals. You talk yourself out of deals. You're not sure. Jake, are we going to do this or we aren't? And then all of a sudden it clicks. You buy the first deal, a mom and pop deal. We like to call them the mom and pops, motivated sellers. They're burned out. There's no systems in there. They had no website. They had weekly renters. It was a beautiful little 25-unit property with cottages and a 6-plex and some duplexes. I fell in love. Don't fall in love, but I fell in love. But I fell in love with the numbers more than anything else. It was a value play. They're paying for
you probably fell in love with what you envisioned to look like. You got done with it too. Like, I always like the before and after visual, know. Also, I like the optics of the before and after income cash flow, but both of them have a part with me because I find it a lot easier to turn something around if I can give it, if it can end up looking romantic somehow. You know what I mean? Like
Mm-hmm.
looking well, looking
Yes.
organized, looking straight, looking clean. Uh, you know, and that's the fun part for me. Probably part that makes the money, but management and so you have systems, you have management companies now, or are you managing your own?
Yeah. So what happens is, in the last 6 years, we've scaled up. We bought our first 1,000 units by ourselves. Jake, my partner Mike, three of us. We've bought the first 1,000 units ourselves. We refied out over $9 million from those. That's how we continued to buy. Like I said, produce, produce, produce. Don't consume. Continue to reinvest. Multifamily, like your business, it's a long game. You're the farmer planting the seed. You got to water the seed, and you got to let the seed grow. You just hope to God that it doesn't get a hailstorm. You don't have a correction, and you got to be lucky. But if luck and hard work go hand in hand, the harder you work, the luckier you get. So for us, we did that. We created the property management company, so we self-manage our own properties. We created the Jake and Gino brand, the education. So we have an education company. We created a syndication company a year and a half ago. We started syndicating deals. So we syndicated the last 600 units we've bought with investor money. We've done 3 syndications. So we've created an asset management company. We've created a capital company where we're doing mortgages. So we're doing something that's very similar to you. We call it multifaceted multifamily. We have multiple streams of revenue from one entity. When you're buying a property, you can manage it, you can educate, teach on it, you can lend out to your students, and you can start raising capital and buying these deals through a syndication.
Well, I'm always telling people the hardest thing an entrepreneur will ever do is find one good idea and finish strong, finish big. But I'm as guilty as you. I'm a super AAA entrepreneur, and I recognize the potential of all these different businesses. Yeah. And I have 8 businesses right now. They all feed off of each other.
Isn't it
but
great?
I've had to slap my hand, and my partner and I had to slap each other going, no more, no, stay with the ones we got. I understand it could be a big winner. We already got 8 big winners, or at least out of the 8, there's 4 big winners. You just need to stay there,
So Mitch, with us, the thing with us is with our syndication company, we brought another partner on. So he does investor relations. He does day-to-day. We had 600 people on our investor database. Gino can't call them all because I have students to take care of. I do education day-to-day. Jake does property management day-to-day. And we underwrite deals and do everything. So we needed somebody to come on board to call those 600 investors, to cultivate those relationships, to actually have lead sources and to have funnels. So when we underwrite a deal, you can call people up. We have those substantive relationships. And also our partner, Dylan, he's underwriting deals. He's going to Louisville. He's making connections with brokers. So it's very hard to do everything yourself. And when I was doing everything in the restaurant, I was doing everything myself. I couldn't grow. I didn't like what I was doing. I love what I'm doing now. So I can focus on the education aspect, and the education aspect helps the syndication aspect because I have students who want to invest with us. I have students that we can teach how to do. We do live events. So it really is a symbiotic relationship.
To find deals that they can't handle or don't know what to do with.
And we can help students close deals down. And the great thing about it is right now we're at the top of the market, right? We're underwriting 30, 40, 50 deals and nothing's working. So we don't have to force to do a deal. We have other businesses that are complementary. And that's the important part. No deal is better than a bad deal. I tell all my students that don't rush. It might take you 18 months to find a deal, but you got to find the right deal. And most people, when they get into real estate, they just want to do a deal. And the problem is when they do that deal, they have a bad experience. They're like, well, real estate's risky. No, the real estate's not risky. You're risky if you don't know what you're doing.
That's exactly right. So I was going to go on to add, but in every single one of those businesses I have, I partnered up with a person who was perfect to run that business.
Yes.
They needed something I had to, like, what did you say? Person with money needs experience, and the person with the experience needs the money. It was pretty much that, one way or the other, one way or the other in the business I was trying to start. So, but still, you have to agree with me. You're not silent on any of them. They're still dinging you all the time here and there, and there's issues, and sometimes problems come up. So
yeah, but Mitch, do you love what you're doing? I mean, I love what I'm doing, and we have level 10 meetings. I have about 7 or 8 meetings a week, whether it's marketing, whether it's with syndication, whether it's a property management, whether it's the education, but I love what I'm doing. So, and we're creating that culture and that brand where they really work together. And that's the hardest part, is to get them to work as a cohesive unit. And it's hard because you have younger people and they have all different personalities. But if you as the leader can show that, hey, I'm not taking the money, I'm cutting back and I'm putting the money back into this because I believe it. And you're the strong leader and you're out there and you can put all these people together and you're ultimately coaching everybody. That's what you're doing with these entities. And you're a coach and you're listening to them. You're trying to guide them. They're going to want to work with you and they're going to want to be part of that growth. So that's what I found. But you're right. It's nothing's passive in life. If it was passive, it wouldn't be worth doing, right?
Yeah, there's this definition. Financial freedom happens when your wants and your needs are exceeded by your passive income. And I just struck the word passive out and put when it's exceeded by your cash flow. There's nothing passive about anything. Even if you have $1 billion and you can put it in the bank CD and make 1%, you can be passive. I said, yeah, just take your eye off it. Don't look at it ever and see what happens. Just don't watch it and watch what happens.
And it's funny, that word financial freedom and retirement. And, I thought when I had become financially free 3 years ago, I left the restaurant. I said, I'm going to retire, go down. I moved to St. Augustine, Florida. It's freaking beautiful down here. I thought I was going to sit by the beach for a little while. That gets so boring, bro. If you're an entrepreneur, you sit around for a week or two, you get edgy. It's worse. That's worse, having money in the bank and not having any purpose or having any drive or any real clarity, not knowing what you're doing. That's worse than actually being quote unquote retired at 46 years old. That sucks. I don't know why people want to be retired. That's the worst thing in the world.
I checked out for about 2 years, and I didn't even completely check out, but I made my life really easy for 2 years. I came back. So your deal, tell us about how you found your deal for your first apartment complex. Tell us the size, the dollar amount, more or less, and where did you come up with the money?
So this was the first deal back in 2013. So if everyone remembers, that part of the cycle was probably in the recovery phase. Recession was about 2008, 2009, 10, 11. The second part was the recovery phase. So deals were out there. It's funny. There was no money back then, right? There was no sentiment. Rents were $350 for 1 bedroom. The economy sucked. We were growing at 1%. No one liked it. So for us, deals were on LoopNet. There were people out there who wanted to sell. So we found this deal on LoopNet, but we found it through a broker. And, multifamily broker relationships are everything. If you can create a relationship with brokers to have you fund those deals and find those deals for you, it's everything in multifamily, especially in this part of the cycle. We're towards expansion / hyper supply. So you need to really focus on those broker relationships. We found it $600,000 on LoopNet. It was a 25 unit deal. We actually had 10% owner financing on this deal, on the first deal. So we were able to get 10% from the seller. The bank allowed that because the bank had held a note on this deal and they were just flipping out. So we came up with about $87,000 with closing costs because we need to come up with 10%. I had my brother, my partner Jake, and myself. So we each come up with $27,000. That number is ingrained in my head forever. I'll never forget that closing statement. And it was exciting. Weekly renters, the first 6 months, our septics crapped out. Some lady passed away, smelly lady passed away in one of the units. We had guy sue us for his bed bugs. So it wasn't easy, right? But I figured, let me do it on my own. I don't want to take investors. I want to do proof of concept. And I should have probably started syndicating sooner. We didn't. We just kept buying ourselves because it's one of those limiting beliefs that, I'm afraid that if I can't return my investors' money, what am I going to do? So we just continued to buy. But that deal was awesome. What ended up happening with that deal in December of 2015, we refinanced it and we actually pulled out $160,000 on that deal. So we put in 87, we pulled all our money out. We used a little bit of that money for CapEx to fix up some more roofs, to fix up some more exterior. And we love that deal. We still own it today, still cash flowing about $3,000 a month. And it's an awesome deal, awesome little deal.
Wow. So the cool thing about real estate investing in apartments in particular, because an apartment is a forever strategy. You don't have to, I create notes as a strategy. That's a temporary situation because those notes are going to expire. Granted, they'll be around for 7, 8, 9, 10, 11, 12, 15 years, enough to, if you, like you said, plow it back in, there's plenty of cash flow. But it's not going to last forever. And apartments will last forever. My forever strategy is, as most people know, is self-storage. So I wholesale flip and make temporary streams of cash flow in the form of notes to create wealth. And then I go out and I buy mini storages or boat storages around the lake where I live.
You should look at RV. RV is going to be the next spot. I mean, if you're looking at demographics and all.
I'm building 383 units right now.
Dude.
Right in a highly populated area. But you chose a forever strategy of apartments. And my point was, when you get an apartment deal right, it's yours for as long as you want it.
Mm-hmm.
Right? And it gets even better because, you know, if you're doing it right, debt's going to go down over the years, and income's going to increase because rents don't stay the same; they go up. And so you look up one day, and tell me this: 10, 15 years goes by like a snap of a.
That's right. It's amazing. I get a 5-year term and a note. All of a sudden, it's coming due. What do I do? Do I refinance it? Do I sell it? But that's the thing. I want to share with your listeners the 3 pillars of real estate. I mean, everyone take a pen and paper and write this down because it's really important. You got to look at the market cycle. You got to look at the debt, and you have to look at your exit strategy. You need to work on all 3 of those, other than the buy right, the finance right, and the manage right. If you're looking at the market cycle, we bought our properties right back in 2013. We were able to refi and roll. We can refinance these properties like we did. Right now, at this talk of the market cycle, depending on what market you're in, San Antonio is a hot market. You have 24,000 people that moved there last year. It's crazy. So your cap rates are a lot lower. You can't refi and roll in this type of a market. You're going to want to buy better class assets, get long-term fixed rate debt financing on them, 4 or 5 years of interest only. You can do that. That's the type of the cycle. So you have to know where you're buying in the market cycle. The next thing is, what's your exit strategy? Are you going to hold for the long term? Or are you going to buy and in 36 months, like a lot of syndicators do, flip out? Know what your exit strategy is. And the third one is the debt. Are you going to get long-term fixed rate financing? Are you going to get prepayment penalties on this, whether it's defeasance or step down? You have to have all 3 of those. So you have to really think about it, because everyone's always asking me, is this a good deal? Is this a good deal? There's so many parameters to what makes a good deal. You have to figure those 3. And then once you couple those 3, you have to figure out how to buy this right and how to finance it right. And then ultimately, it's all about managing these things. And like you said, Mitch, you have to raise the income, lower the expenses, and look for value to ultimately drive these things.
Okay, so Gino's from New York. He talks fast, okay?
I do.
But a lot of that's because we're trying to get a lot in
Yes.
time here. But so if you want, go to ariainvestorsummit.com, and we're going to say /wheelbarrow. And you also can get over there and get a free copy, a download digital of the book. What is it called? Wheelbarrow Profits, right?
Yep.
Oh, it's right there behind you on the wall. Wheelbarrow Profits. Little play off the word wheelbarrow. It's wheelbarrow, okay? Wheelbarrow Profits. And I kind of see Gino behind a wheelbarrow full of money that he's taken to a bank. I don't know if that's the cover shot or not, but that's what it kind of looks like.
Well, Jake was out there one day cutting grass. He's a chainsaw guy, and he's sitting there and he looks at a wheelbarrow and he's doing landscaping. He's like, wow, the back of the leg is the buy rate. That's fixed. Once you do that, it's done. The finance right, once you get your financing done, you're done. The wheel of the wheelbarrow is in constant motion. That's the one that always works. And you want to get the shovel and throw deals in there, that's with the wheelbarrow. And if one of those is a little loose, a little tippy, your wheelbarrow is going to top over. So, I mean, I've had deals that haven't had one of those 3 parameters met, and I've gotten into trouble.
Okay, cool. So go to ariainvestorsummit.com /wheelbarrow, WHEELBARROW, and download the digital book and find out how Jake and Gino are looking at this opportunity and this strategy, buying apartments. At that point, get over there to the show notes, and that's where you get to slow down a little bit and learn what all these words mean exactly, how they fit into your life, how they fit into the scenario and the strategy. And it's just like anything else, if you're gonna plan to make a fortune at something, or even just make a living, you're going to have to get some education and slow down a little bit and get yourself boned up on what the rules of the game are. Hell, you can't even play Parcheesi or Monopoly if you don't read the rules and understand what the rules are. So we just got to understand what the rules are. And with every day, you get smarter and smarter and smarter with every deal and every conversation. And there's a lot to be learned on the internet and podcasts like this. But when you decide like this is what you really want to do, then quit looking at everything else, drill down and get someone like Gino. If you're going to do apartments, get someone. If you want to do owner financing, single family houses, call me. That's what I do. Don't call me for apartments. That's not what I do. And I'll tell you, if you call me for apartments, I'll tell you, go talk to Gino, or because that's not what I do. But, and I've stayed for 22 years in this one little segment that everything revolves around. Mm-hmm. My little strategy. Gino's doing his strategy. And everything that he creates revolves around that little world that began with one apartment complex where he had to write a $27,000 check along with his other partners. So tell us a little bit about this book, Will Borrow Profits, that you're giving away.
It's our strategy. We just really go dive deep, take a deep dive into each leg. You know, what is a buying criteria? What do you need to look for in multifamily for buying criteria? We look at cash on cash returns. We look at cap rates. We look at debt coverage ratios. We show people how to buy these apartments, what you're trying to do in multifamily to manage right. We have a 3-step repositioning framework. I can go into it, but it's going to take a little too long. It really talks about how to manage the property, because if you're not managing it yourself, and you don't have to, you're going to have to hire a management company. So we show you how to hire, third-party property management. And the finance component, it's all about really agency or community banking. We talk about that. What's great about creating a capital company is we're up to date. Our mortgage guy from Rand Capital, Nick, agencies they're lending a little bit less. Now they're getting a little bit more funded. Now we're learning about CMBS, because CMBS is the hot thing in multifamily, whereas 3 years ago they weren't. So you can be an educator all you want, but if you're not doing it, you need to be doing it, not just selling the education, which is exciting because the market is constantly changing. Multifamily, basically the averages, whether you talk about cap rates and calculation, is always going to be the same, but there are new strategies that are being implemented. The cycle's constantly changing, technology is constantly changing. So for anyone who's educating out there, the best way to learn, you do, and then you teach. Because once you become a teacher of it, you really start learning it, because you really got to immerse yourself and really learn the space that you're in.
People ask me why, if you're so successful, why are you still out on this podcast and teaching? I say, I learn more being the front and center guy or the educator, because I'm talking to students all over the country. I'm on top of my game. It's helping my businesses. Yeah. I see it all back home. It keeps me engaged. It keeps me up to date. It just keeps me in the know. It helps me find private money. It helps me do a lot of things. And I never want, just like you discovered, I don't want to be sitting on a beach 365 days a year. To drive me crazy. I like to be wherever I want to be. Whether it be playing golf or at the ranch riding around on my golf cart hunting hogs or whatever it is I'm doing. And then when the phone rings, I just pull over, answer the question, solve the problem, connect A and B, give a reference, give my take on it, and then we hang up. My business keeps running with the newfound answer to the question, and I get to keep hunting. And I think, the first phase was always, how do I make money? After you make money, and I think you'll attest, after you've made enough money, and for me it was around $250,000 a year, because I really couldn't spend any more than that. It would just throw me into a higher tax bracket, and I didn't need to go into a higher tax bracket if I was going to drink the same beer and eat the same bologna sandwich. It didn't matter if I made money. So I started, the side note of that is, so you start doing everything else in your IRA for the rest of the year, or your solo 401k. But after you made the money, the next challenge was, how do I make the same amount of money or more, but don't do all of what I'm doing now? That's a whole nother challenge of life. And yep. I got engaged in that and immersed in that. Like, okay, I mastered making the money, at least enough for me. I was satisfied. And not that we, you measure by, could I make some more this year or not? But for me, I didn't want to measure anymore by, if I work harder, I can make more. I was going to try this plan that I'd heard about, do less and make more. Now that was like, I didn't understand that. It didn't make any sense to me. How do you do less and make more? Ron LeGrand threw that out at me one time. It has a book called that. The less I do, the more I make. And I thought, now there's a concept, and every concept in my life, but when I first looked at it and said, that's interesting, I didn't get it. I didn't own it in my heart. And I wasn't sure that they weren't full of crap. But if you start to get into those theories and strategies that seem a little upside down at first on the surface, you start to figure out why people are saying that. Mm-hmm. And so
I think people a
chance to get behind the curtain and see how that works. Like you said, first you got to buy it right, and you got to look at the numbers. Well, people will tell you anything in the world, right? You have to figure out that the numbers they're telling you are really the right numbers, because every seller in the planet's a liar 99.9% of the time.
Mm-hmm. I think people have to figure out whether there's two ways to do it. You either pay to play or you seek to serve. Two ways. I mean, and I think, you have to find people who are successful, because success leaves clues. So if these people are saying that and they're super successful, they're not making it up, they're living by it. So if you find somebody who's living by that mantra, and I agree with it. And the funniest thing for me was the whole Bob Berg mentality of the go-giver. I'm like, that's a bunch of BS, but really anyone who thinks about themselves, when you go out to a sales meeting and you're thinking about what you can get from the prospect knows that. I mean, that's what happens. But if you're out there really listening to them and finding impact together and selling and trying to solve their problem, the more problems you solve as an entrepreneur, I always say that entrepreneurs solve problems. Politicians exploit problems. That's the big difference. We're here, me and you, trying to solve as many problems as we can, whether it's for our tenants, whether it's for our students, whether it's for our employees. And the more problems we can solve, the more impact we can have, the more money we're going to make. But I don't think either me or you right now are motivated by money anymore. We're motivated by just having a good time.
The reason why we still buy 120 houses in one of the most competitive single family housing markets in the world right now, that everybody and their dog's an investor right now, a house flipper. It's incredible. When I started out, no one knew anything about it, hardly. It was a very quiet
Give it a couple of years. It'll shake out. You'll go back to the cycle where everyone's going to lose their shirts and you're going to be up there scooping up 500 homes a year.
But what I was going to say was what's made the difference is when I go to someone's house, I'm trying to figure out what do they want. If they really are, if they're calling me because they're in a corner, they really want to keep the house, but they don't know how, I'll put my mind first and foremost to say, well, if you want to keep the house, let me see if I can figure out how you can keep it, which means I'm not going to buy a house, which means, which doesn't matter. 90% of the time I can't help them keep their house, even if I want to, but I can try, and at least I can put the effort forth and say, and ask the questions, go, well, if you had this or you had that, you could keep your house. Or I know, now every now and then I'm able to help someone see something that seems pretty obvious to me, but it's just not obvious to the common person, or to an elderly person.
Yep.
And so I say, I figured out how you can do it. You just need to do this. Do you want to do it, or do you want to sell the house? There's no, I want to keep my house. I say, great. Let me get you with my attorney. They'll get this all done for you, and you'll be able to stay here probably until you're not here anymore. You'll be able to live here until you don't need this house anymore. And
then you have a happy client, right? You have a happy client, and then all of a sudden that client refers you to somebody else. You've done the right thing, and things grow.
There's something about the aura or the energy that you put off when you go in to help someone that is recognizable by the other person with no words. There's the way you carry yourself, or the way, I don't know what it is exactly. You can call it whatever you want to, karma, special sauce, radiation. I don't know what you want to call it, but it's picked up on. And they won't sell they may not come to the conclusion that they need to sell their house that day, but they won't sell their house to anyone else but us. And that's why.
That's huge.
I believe that's why.
That's huge. I agree.
Yeah. So, because we went in there trying to help them, and most of the time they're sunk, but at least we try, Other times it's real obvious, hey, I want the hell out of here. I'm gone. That's okay. Good. All right. We got to wrap it up. I got another interview right behind us here. So any words of advice to someone who's probably just contemplating reinventing themselves, and maybe apartments is what they're looking at? Well,
very simple. Slow down. Maybe seek out a life coach. I became a certified professional life coach. I love life coaching. It gave me a lot of clarity, gave me the reason why. My why was I just wanted to have impact on my life. I wanted to be a great role model for my kids. I wanted to work with my family. I wanted to build something powerful. And the reason, then it leads you to how. And how do I do it? I figured out that multifamily could do that for me. So if you want to get into multifamily, if you want to get into flipping homes, figure out why. And I think the second thing is get clarity on it. And then the second is really invest in your education. Don't do it all alone. If you're going to go to college for 4 years and spend $100,000 and go to college, find somebody and spend 10 or 15 grand with a mentor or with a coach or whatever, and really focus on it. And it's not spending money. You're investing in your education. You will always have that. That will always be with you. And surround yourself with like-minded people. Join a community. Your environment is really huge. You're identifying as that person that you want to become. If you're stuck in the kitchen and you're surrounded by dishwashers and all, how are you going to grow? How are you going to get into the multifamily space? You have to step out, go to events, surround yourself with other people. When I met my partner, Jake, he was my mastermind. We both worked really well together, and that's what saved me. So if you want to do that, become sure of why you're doing it, then figure out how to do it. It's not that hard.
I can promise you, You're either going to pay the mentor or the coach, or you're going to pay the street. And the street is ruthless, and the street will crush your hopes. It won't give you any encouragement, and you may lose a career early on because you made a few wrong moves real quick. And I was almost a victim of that. I almost quit a business that has made me millions and millions and millions of dollars, and that I've been so happy in, because I didn't have anyone to help me. And I did what I thought was right, and it almost chopped my head off, you know?
Yes.
I like to tell everyone I graduated from La Calle U. That's the street in Spanish. So, you know, it's the most expensive university in the world. It'll take all your money, and it doesn't give a damn. And there's no fight song, and, you know, they don't have a mascot. It's just, they're going to take your money.
I like that.
All right, brother. Thank everybody for stopping by to get you some Gino Barbaro, and I want you to go by and download the book Wheelbarrow Profits. Wheelbarrow Profits at REinvestorSummit.com/Wheelbarrow, and that's WHEELBARROW. It's so nice that you have that right on the wall, right behind
You like that, huh?
Yeah, I like that. I'd like to thank everybody for stopping by to get you some Gino Barbaro, and you guys get over there to the show notes and have a great day. Get your dreams done. If you're on the fence, man, just get some consultations from somebody. You know, we've got these 300 podcasts here. Start talking to people, find out where you belong. All right, brother. Thanks a lot for coming on, Gino.
Thanks, Mitch. Take care, everybody.